Hello and welcome to another episode of Market Maker Mondays. I'm the Nomadic Trader, and this week I'm going to do something a little bit different because I've had some really good questions in the Discord group from AJ and AJ108 in fact. So I wanted to actually start the video with answering those questions because I think what it actually does to me is it highlights what ICT's actually said in the mentorship program for 2022, which is, as an educator or somebody that actually does these type of videos, there are certain things that is very, very difficult to teach, very difficult to put into words, but also it's that gap between tuition and experience. And I think some of these questions do actually fall within that category. But what I wanted to do is I wanted to start, as I say, with just breaking this down. So first question that I've actually got, number one, why don't you draw the premium and discount from this high to this low? And AJ, the reason being is because this high here was at the start of the displacement and the break of this market structure here. So this is leg one with a retracement leg two. Then this is actually leg three. And then following that, we saw the retracement, which was leg four. So the first leg, this is A, B, and C retracements. Then we actually move down following the market structure, and then this is a new dealing range high. And then the reason why this one was the dealing range low and not this one is because this was the end of the week. So if you go back up to here, if I go back, so that's the 1st of September, the 2nd of September, and that's the 5th of September. So this is what it would have looked like on the Sunday when I recorded the video originally. But then obviously when I was talking about this leg here, the next candlesticks didn't actually exist because this was the following week. So the dealing range is A to B there. Because this is part of this week. So that's the 26th, this was actually the week before. So that's the 26th, and this is the beginning of the week. So 29th, 30th, 31st, then the 1st, then the 2nd, and then this was actually the Monday's trading indecision inside candle. And then what we did is, as we outlined, we took the sell side liquidity here. We have completely filled in this imbalance here. So what we've done, and then going back to your other question, before breaking this lower high, right, okay, no, sorry, that one's, so before we break this lower high here, which is actually, it's not a lower high on the daily time frame, it might be a candle swing, but nothing was actually traded through it, so this wasn't actually part of this market structure here. So you can see that they're not swings, they're just candle formations, whereas this is a swing because there's a run. There's no run here to actually give a swing in price. So you see the difference between this is a swing, this is a swing, this is just consolidation, then this is a swing, and then back down here. So it's not just three candles, it's a swing. So you've got a run and a pullback, a run, consolidation, and a run and a pullback, a run, etc. And you're only looking for market structure shift on the lower time frames, the 4 and the 1 hour time frame, when we've taken higher time frame liquidity, and that links onto this one. So the sell side liquidity, this wasn't really sell side liquidity because this is the move, this is where all the liquidity is. So there would have been a little bit of short-term liquidity here, but that would have actually been taken out from this here. So you would have had some liquidity here because you've had a swing, and then we've actually traded lower, but we've actually traded deeper between this level here and this rejection block into the range of this candle here, and then we traded higher. But people aren't, I mean, it's only the short-term traders here, but the big institutions, they're not going to be trading long here because this is only a pullback on the daily time frame. So where we've traded lower here, this I wasn't actually seeing this as sell side liquidity, only for order taking. So anybody that was short here took profit here. I personally wouldn't have actually seen this as a big sell side liquidity. This would have been just a target. So you wouldn't have been looking to go long here because this is A, B, C retracement, and then what you're expecting. So this is A, B, C retracement. What do you see? An extension. This is A, B, C. What are you expecting? An extension, not just a trade down lower and then go up again. So you can see how far we traded from this low to this low before we had a retracement. And then from this low, we've got so much further downside objective down to take this low before we then see a pullback. So you're not just looking at taking out a low and then looking for a retracement. Sorry, not like for a retracement on the higher time frame. But also what I want to draw your attention to is this here is a bearish order block. Yeah, so we've created this placement. There's candle 1, 2, and 3. Then we've actually came back up to take the buy side liquidity here. Then we've come back down again. Okay, and then what we've done is, as we go further down, we've completely closed in that imbalance now. We've taken the buy side liquidity and then we're heading lower. And you see this here? This is a carbon copy of this. So we've created 1, 2, 3 displacement. Then we've actually traded. Now, I'd actually missed this at the time, but we'd actually traded back into this fair value gap and then we traded lower. And then as we come back down, because we've actually traded, we've taken the buy side here, then we have taken the sell side here. What we've then created is another imbalance here. So this is the displacement leg. So what I said to you in the Discord group is the way that the dealing range, it can be dynamic and it shifts. This is the dealing range. So if you were taking a short term scalp on the micro time frame, 5 minute, 15 minute, then this is the dealing range. So you're not going to be looking for higher objectives because we haven't actually extended down. This is just a short breather. We've actually come back down. We've traded back into a premium here. And at the time I hadn't identified this. So this is actually hindsight, having reviewed last, the week before last. Yeah, so we'd actually traded back up into that. And then we've come back down. So this was actually still showing signs of deceleration. And then what we've done then is we've come back up, rejected that level again, and then we've come crashing down. And that actually sees us out to the end of the week. So that's the reason why you're not looking for just a reversal there, because if you go here, look, what we've actually done is we've taken the sell side liquidity here. We've created a market structure shift, but all we've done is we've actually come back into this leg. So this is actually an OTE from here to here and then back in, and then exactly the same here. And then we've traded lower for this sell side liquidity here. So that sell side liquidity is being taken. So that's confirmed now. The next sell side liquidity objective is this here. I think this is going to be easy, likely maybe Monday, Tuesday. Sell side liquidity. I'll take that short-term dealing range off. So hopefully that's answered all of your questions from the group here, because you've got a market structure shift, but you can see how long we've been going down here. but that was actually from a much bigger run. We were seeing deceleration. We were trading into a weekly PD array as well, whereas this isn't. This is just a short-term sort of run on sell side. So what I'd say is just don't get confused between the two. So close that. So we had some really nice price action last week. So what I actually wanted to do, something different, is what I do to review the week is I will have a look at the daily time frame, find out where the last week's worth of trading is. So there we go. So that's last week, of course. So that's the weekly high. So that's now the previously weekly high, and then this is the previous weekly low. So this will actually give us the high and the low of last week, previous weekly low, go up to the weekly time frame. There you go. So the previous week we actually saw an outside week. So what that means is an inside week would be where the second candle is smaller than the first candle. I'm just looking for an example. So here, so this here, the whole of the trading range all week from the high to the low, including the body, was within the range of the previous week. And what that does is it shows deceleration and it shows indecision. Whereas this, an outside week, excuse me, what that does is it shows that we've taken the buy side liquidity, taken the sell side liquidity, so we've actually cleared both sides of the market. And usually what happens is there's a big move when that happens. So if I can find an example of that one, where there we go. So this is an outside week look, where we've taken the buy side, the sell side, and then we've had a big move down. Another one here, outside week here, big run down. So it's not surprising actually, but I just completely missed this. And if you have been keeping up, I was actually looking for this here as the monthly potential mean threshold. So that was really well documented. So if I just put that on here, go to the weekly time frame, what I'd actually failed to recognize is, and I will highlight this onto the high of that order block there on the weekly time frame, and then I'll delete that so it's nice and clear. Go to the daily time frame. I'd completely overlooked the fact that this is a big pivot. So we've got this acting as resistance, as support, here support, and then this is showing signs that it does want to go lower. This was the retracement, and then we've actually closed below here. What we've done is we've actually broken and we've retested this pivot, and then we've seen lower prices. Complete oversight on my part, something that I missed and something that I wasn't actually familiar with. So as you're already aware, like I only discovered ICT 12 months ago, so order blocks going back to that point are still new to me in my trading. So that's something that I've actually taken away from this, and actually just sort of paying attention, closer attention to the significance of this. So it's acting as support here and here. However, we've traded below and we've created that retest, and then we've sort of sold off. So I'm going to go back up to the monthly time frame, and what we've actually got now, we've got confirmation of this 1, 2, 3 as a swing high, and we're expecting lower prices. And I highlighted that we've actually got this fair value gap here to come and fill in, which is 35.50. So let's just say 3,500 to 3,600 from memory, yeah. So 35 to 3,600, I reckon, by the end of the month, and that'll be sort of 6 days, 5 days. And then when we have a look on the weekly time frame, I'm going to delete that now because we've taken that. But what I wanted to do is I wanted to show you how I would sort of do testing on the market, so you can review the trades, whether you've taken live trades, what you've missed, and it will give you a better understanding on how to train yourself to see the opportunities in the market. So I'll put these indicators on, and I've actually got this set so it'll actually map out 5 days. So we've got the high of the week here. Okay, what day was that on? Tuesday. Okay, so power of 3. And what I would do on this indicator here, I'm just going to switch on the weekly open, and I'll put that in white. So here's the weekly open. So what I'd actually suggested is, I'm just going to have a sip of water, just in case you heard it. So what I'd actually outlined was, if we traded lower on Monday to take the sell side liquidity, but then traded higher into Tuesday, then that would actually indicate lower prices. But if it was the opposite, then that would actually give me the sort of confidence that we could be seeing a deeper retracement on this. So what happened was, here's Monday's trading, here's the weekly open. We've traded lower to induce people for continuations lower. Then we've actually come back up and we've taken the liquidity here. So what I do is I have a look at the session here. So the white boxes with the labels on, that's the Tokyo or your Asian range. Then you've got your London trading session, then you've got your New York morning or AM, and then you've got your New York PM. So very first and foremost, what we're looking at doing is we're looking at identifying what the weekly expansion is. So we've got this outside week, so we've taken the buy side, we've paired the sell side liquidity, and then what we've done is we've actually closed lower than this. So because this is an engulfing, we've actually cleared this out. The momentum is to the downside. Now, if you are familiar with my DDP and also the daily bias video, it goes the same for the weekly. So as long as we're actually creating higher candles like this in a run, we're always expecting higher prices unless we reach a higher time frame PDF within a premium and we see a swing, and then we're looking to just trade lower than the previous week's low. So with that in mind, we've actually traded below the previous weekly low, and then we've expanded to the downside. So the weekly expansion was bearish. We've traded below the low. We've actually got the Judas swing here at the beginning of the week. So this would actually be the power of 3. So 15-minute time frame. So now you know, obviously, the formation of what the weekly candle was. We can see that now on the 15-minute time frame. So here's all the information, and I know there's a lot there, so I'll walk you through it. So Monday, we've taken the sell side liquidity to induce sellers into the market. And then what we've done is, if you were to take the high here to the low, all we've done is we've just traded back up into a premium from this swing or this rundown. So yes, we have a shift in market structure, but we're expecting lower prices. We're expecting, if we are going to go lower, for the high of the week to form in and around Tuesday, which we've done that. We've also traded above the opening price, which is this horizontal white dotted line here. And we've had a grab on the buy side liquidity. So we've taken the liquidity at the top of the Asian range, and then within London we've had displacement lower with lower lows, lower highs all the way down. And then we've actually traded into New York. So if I zoom in here, so now we've got in our minds that we've taken the liquidity here, That's actually potentially now the high of the week. So we'd have that in mind because we've now had a shift in market structure. So what I do is I will have a look on the 1 hour time frame to see what that looks like. Are we on the side of the 1 hour institutional order flow? So I'm going to, I wonder if you can see yellow. Hopefully you can see yellow okay. So I've just indicated that there with yellow. I go back down to the 15-minute time frame. Here we go. So now this was the 1 hour swing low. The 1 hour time frame is now bearish. So with that in mind, what we're doing is we've already taken the highs from the Asia range, and then now we've actually got this here. So this would actually be a market maker sell program. So I don't know if you would start here or here, but you've actually got a run up in price to reach higher time frame objective. Then you've got a shift in market structure, and then that's paired with the downside here. So the first opportunity, if you're trading within the parameters of 2022 mentorship program by ICT, would be this. So this here, it's not a run on an old high, but this is actually 1 hour market structure. And what we've done is we've traded into, oh, it's because the gap has fully closed, it won't show you, so I'll draw it in manually. We've traded into that order, that fair value gap there. Sorry, my computer's running a bit slow because I've got so many indicators on it. I don't usually have it like this. So if I just, there you go. So we're in a institutional order flow on the 1 hour time frame going lower. Then we've had a retracement. We've cleared the short-term high here. So this was actually the morning session high, which is cleared just at the time of New York lunch. So whether you're actually trading this or not, because this would have been really close, bang on 12 o'clock, and 12 till 1 o'clock is actually no trade. So maybe you caught that, maybe you didn't. So what I would do is I'd have that marked on a chart, and what that does is it actually imprints it to your reticular activating system. And then you've also got this here, which you could have seen as another opportunity to go short. And this would have been your entry where we've traded back up into this. And then you'd have been looking at taking internal range liquidity as well as external range liquidity. So that would have actually been a take profit for you. And then you'd have probably, if you were following the rules, that would have been a partial there, and then you'd have actually been stopped out the trade. So that was just before the cutoff. So this line here denotes 4:30, which is actually the close. And then you'd have had to have held that through the Asian range. Okay, so to make this a little bit more specific, what I do is I use the moves with the calendar. So from last week, the first news announcement wasn't until Wednesday. So if you're only trading around the news, this is Wednesday's move here. So you've got your Asian range. We've taken the lows here. We've traded back into this fair value gap. We've traded higher into the news announcement. ICT's already covered this. And you can see that we didn't have a shift in market structure here for an entry. This is lunchtime. And then this one here would have actually given you the entry. So you've got your relative equal highs. We've had a displacement lower, And then what we've done is we've come back up to whipsaw that. We've taken the buy side liquidity and then we've moved lower. So that one there, what I'm going to do, I want to see what that looks like on the 1 hour time frame. This is how I actually filter my trades out before. So you can see part of my rules, which is going to be in the trade checklist that I'll be releasing soon, is the 15-minute needs to be trading at a 1 hour PD array, which is this 1 hour fair value gap here. So at the time of the news announcement on Wednesday, we traded up into that 1 hour fair value gap, and you can see how perfect we balanced it right to the pip. So we've taken the short-term high, we've then so we've taken the short-term high, we've completely closed in the range of this imbalance here, and then we've actually traded lower, created another fair value gap here, traded lower, created another fair value gap here, traded lower. So you can see how when we're in a daily run during a weekly expansion, how well the 1 hour time frame PD arrays are respected. So part of my criteria for trading is the 15-minute time frame needs to be aligned with the 1 hour PD array. So we've got your equal highs here, relative equal highs. We've had inducement model. We've then come back up to take the buy side liquidity here, and there's your fair value gap on the 15-minute time frame as well. We've traded into this here, which is your bearish order block on the 15-minute time frame, and then we've actually traded lower. So obviously all of that is hindsight, but the way that I've been bridging the gap between the higher time frame narrative and bias to the model is this way. Map out the weekly expansion. So you've got, we're expecting prices to open here, trade higher, and then trade lower. That's your power of 3. Accumulate, accumulate, manipulate, and distribute. So accumulation, distribution, and manipulation. No, accumulation, manipulation, and distribution. So it's actually, I'm recording this quite late on Saturday night, so a little bit tired, but that's not an excuse. I should still have my act together. Okay, so where does that leave us for this week? So you can see the difference here. This is a big range, whereas this was only a small range. So the good news is we've run out the sell side liquidity here, and we've actually traded quite a bit lower, but we've had a big rejection here. What I would like to see is if we come back down here Monday into Tuesday, then I would be anticipating some higher prices. Let's have a look at the news calendar. So for next week, medium impact news at 4 p.m. I don't think the market moves that much for these speaks and meetings unless it's something like this. So the chairman Powell, he's actually speaking at 7:30 a.m. on Tuesday. So that's much earlier than the normal news release, which is actually held until 8:30. And so I would say anywhere really from 7:15, the markets are actually going to start getting sort of quite liquid. We've got some really decent news this week. So from Tuesday, so the buy side liquidity, nice and simple, is this here and this here. This is actually the previous weekly high, which is also the daily swing high. So the dealing range for me that I'm interested in is this here. And why this one? Because this is actually the displacement leg. So this is, for me, this is actually the dealing range, high to low, and we could come back up to completely fill this in, trade like through it on a wick, and then come back down lower. If we actually come and close above this with a the candle, sorry, the body of the candle, then that would actually mean that we wanted higher prices. However, if it rejects this and then closes lower and it respects that level, then price might actually be willing to just stay around there. So what does that look like on the 4-hour time frame? So we've got lower high, lower low, lower high, lower low. So there's definitely scope for some retracement to come and fill in this imbalance here, and then to trade back up into a premium, and then maybe even come and fill in some of this 4-hour range from here to here. And the way that I would actually be looking to do that would be, first of all, see which side of the market it wants to take on Monday into Tuesday. And then when we've actually got these news announcements, I will have this indicator on, okay? And then I'll be looking for time of day and then the price. So another question that I get asked is, how do you know which level it's going to turn around at? Well, that's where your dealing range comes in. That's where your premium versus discount, and also that's the time of day, because if price is down here and it's 7 o'clock, then you don't have much time to get all the way up here by 7:30. So that should help give you an understanding about which levels you're going to see a reaction at. And then obviously if price moves higher, if price is already here at 7:30, then there's a potential that we could actually come back to trade a bit higher than that. So it's time and price theory. Okay, so time comes first. So on the 15-minute time frame, I'll have this. I'll be looking for the daily open. If I want to sell, it's above or within a close proximity, entry for a short. And I'll be looking for one or two things at the news announcement times. I will be looking for power of 3 on the weekly. Is it Tuesday? Have we traded higher above the weekly open? Are we showing signs of going back into a premium within the current dealing range? At that moment in time, is the 15-minute time frame trading into the 1-hour PD array above price? And then I'll be looking for that displacement leg lower outside of the liquidity. So the liquidity could be like this here, which this is 8:30 on the left, this is 9:30. So what we've done is we've actually got the displacement leg lower, then we've actually created this fair value gap where we've traded up into it. We've also taken the short-term high here, and this is an inducement model because now people think that this is long. However, all we've done is we've just traded back into closing some of this range, and we've so this would have actually been, if we have a look here, so that candle, 1-hour time frame, there we go. So we've actually traded into this fair value gap on the 1-hour time frame. So hopefully that's given you a further insight into how I'm looking at bridging the gap between the higher time frame narrative and taking trades on the lower time frame in line with the 2022 mentorship. What I want to finish on is where I think the liquidity is. So this is definitely something to look out for. If we start to, ideally Monday, Tuesday, we actually see a short-term shift in market structure, and if we do, then I would have confidence in trading this higher up to about here, and then this would be the low-hanging fruit. This would be the higher objective, and then if we do come up here, then that would actually give me a really good target to come down to this sell side liquidity. However, if Monday and Tuesday we actually trade lower to take this, then we could see a repeat of what happened here where we just fall off a cliff. And if that does happen, the draw on liquidity on the weekly time frame is this here. Actually, the next one up, which is the lower hanging fruit of the sell side liquidity on a weekly, and this is lower. So that's going to be the draw on liquidity for me. That one's done. Take him off. Daily. So there's your buy side liquidity. So I'm going to highlight that now. Buy side liquidity, and then buy side liquidity there. Buy side liquidity here puts us into a premium, which is nice. If this is completely closed in, but then it rejects that level, that would actually be classed as a premium as well, because we've traded up to that level. But if we are going to trade through this, then I would expect this to be tapped. And then with any luck, we will see this roll over. Obviously, there is always the possibility that we could come back down, take this Monday, Tuesday, and then see a reversal higher to come and close in some more of this range. And if that is the case, if we're actually trading up here, then I would expect the dealing range to shift to this. And the reason being is this does not have a retracement yet. So this here, this big leg, is the same as this here. So we could actually see a deeper retracement to create an A, B, C, and then that's when we could look for an extension down there. So hopefully there's enough context covering all of those things. If you've got any feedback, always welcome. Please put it down in the comments. And the next video that I'm actually going to do is in and around the trading checklist. So if you're not subscribed already, please do subscribe. What I would like to do is I'd like to see if I can get as many people to share this on Twitter as possible, because that will help the channel grow and it will give me the opportunity to reach more people. Plus, if I get the opportunity to monetize this channel through like the ads that probably already show on your end anyway, if I can actually make a little bit of money from that, then happy days. Passive income and all that, almost passive. Well, anyway, enough rambling. Thanks very much for watching. If you've made it to the end, give me a thumbs up and I will speak to you soon.